All righty. Good afternoon, everybody. Hope you're doing well. I'm going to talk butterflies today. And I think Mark is on with me. Mark Fenton, are you there? Good morning. Good morning. Good morning.
Good morning.
Mark's from beautiful Missouri. Is that the Show Me State? Is that what that is?
Yes, it is.
Show Me State. And so Mark is just going to come on here for a quick minute and talk about a class that he's going to be, an intense class. He's going to be teaching starting Monday, August 13th. If I got this correct, it'll be Monday, August 13th at 9 a.m. Central. I think he's going to go Monday, Tuesday, Wednesday, Thursday, 2 weeks in a row. And is that correct, Mark? Why don't you tell a little bit about the class?
Yeah, there will be a preview seminar, webinar, this coming Monday the 13th at 9 a.m. Central. But the class itself will start the following Monday. It'll be Monday through Thursday of that week and Monday through Thursday of the next week. All of these at 9 a.m. Central. We'll be getting together for around 30 minutes, take a look around at some new sites I like to use, look for pairs, put some live trades on, and then when we get together the next day, we'll look back at those. Of course, everything with a plan, and we'll just go through just getting used to finding those kind of trades and managing them.
Fantastic. And so this is going to be, now on the screen here, it says pairs trading, ZB versus UB futures options. What's that? Is that going to be the focus of the class? Why don't you explain a little bit about that?
Yeah, it will be futures options. That's what we'll use, our futures themselves, not even really the options. It'll be the futures themselves, such as the ZB 20-year versus the UB 30-year U.S. bonds. And there'll be other pairs trading certain currency futures against each other. We may even do some commodity spreads in like oil, which is selling 1 month, buying another. But we'll be looking for pair setups of all different kinds.
Okay, and so this will be very practical. Like you said, you'll be putting on live trades, explaining how you're doing it. So this won't be like this is going to be extreme, which all the classes through us are, very practical. It won't just be, this is what pairs trading is, here's some examples, but you're going to be how you analyze it, what do you look at to make a decision, you're going to put some trades on, monitor them, the whole 9 yards, right?
Exactly. The focus will be on trading. How do you find these trades? How do you put them on? How do you manage them? It won't be so much like a big presentation and a bunch of guidelines and rules. We'll just be getting into trading and looking at live things as they come to us together.
Good, good. Yeah, that sounds like a very practical class starting August 13th, and look forward to that. And as you said, there'll be like a free intro on that coming up soon.
Monday the 13th at 9 o'clock Central Time. It'll be Monday morning, next Monday morning.
I got you. Okay, I got you. So Monday the 13th here is the free webinar, and then the class will start the next week. Is that right? Okay, now I got it.
That's correct. Yeah, that's right.
All right. Well, in the class, so the class will start, it looks like August 20th, and you'll go 4 days in a row for 2 weeks. Around 9 Central till 9:30, and just very intense for 2 weeks, looking at trade setups and everything. That sounds like it should be a good one. Yeah, appreciate it.
Yeah, we've never done anything quite like it. We're going to be much frustrated. Yeah.
And there'll never be anything quite like it after that. So this is good. I don't know. I don't know if I'm more impressed with the class coming up, or am I more impressed with Johnny's graphics here. I think he outdid himself with these two guys with the pairs trading. I think Johnny gets the award here. This is pretty good pictures.
That's very
here.
Nice. You did a great job.
Talented. That's why we pay him the big bucks, to come up with stuff like this,
Exactly.
So, all right. Well, thanks, Mark. Appreciate it.
All righty. Bye-bye.
All right. We'll see you later. Great. So, folks, let's move on here, and we'll jump into the butterfly class, and I'll tell you my thoughts on all this. in a second, but this would be some information for the butterfly class, and then we'll jump into some butterflies here. We're going to be doing a new 3-week class featuring the butterfly in all of its glory, starting Monday, August 27th at 1 p.m. Central. It'll go Monday and Wednesday for 3 weeks, minimum an hour each class. Usually I go over a little bit. Course is $297 for 3 weeks, and it's twice a week for a little over an hour each session. All classes are recorded and archived for your review. And the nice thing, you can ask questions directly to Dan in and out of class. So, you know, if you're working, you can't watch all of them live, or you can't watch any of them live. You watch it recorded, there'll be a button there. You ask Dan a question, or if Mark's teaching a class, Mark, and a button go right to him and you can ask him. So even if it's four months after the class, if you have some questions, just send us an email. During it, we'll be covering most of our successful butterfly methodologies that we've been doing over the last 3-4 years, but up to the minute, you know, these things are always changing and tweaking to make things better. That's life. And so you'll get the, you know, how we're doing these things now in the different volatility environments. And again, all experience levels can participate and learn. It's going to be very practical. We'll be putting on live trades, and so it should be a great class. And that's it. And let's move on. And one thing I'll mention, just so you know, that the next 2 classes I'm doing, just to let you know my dilemma, I wanted to do a class on butterflies and then a class on calendars. And you know, all those classes would include different durations, different types of calendars and butterflies. But the next class after butterflies would be calendars. My dilemma is this. We'll see how, we'll see. What do you think my dilemma is with, I wanted to teach the butterfly class first, then the calendar class. What do you think my dilemma is? Yeah, my dilemma is we've dipped under 11 in the VIX, and it's basically the lowest level in VIX since Julius Caesar came to Chicago to open the first Portillo's hot dog stand, right? It's a long time. So you say, Dan, wouldn't it make more sense to do the calendar first than the butterfly? Yes, but here's the other dilemma. And so I'm just going to wait a little bit. Here's the other dilemma. The class doesn't start for 2.5 weeks, right? You know, could you imagine a scenario, what are we, 15 points off the all-time high in SPX? Is there any possibility in the next 2.5 weeks before the class starts that SPX could be lower and VIX could be back up to 13? Any possibility that that SPX could retrace? Of course. So that's just my dilemma. Those are my next 2 classes. I'm planning on butterflies and then calendars, and I'm just kind of waiting for, that's my plan as of now. If there's changes, I'll let you know. My dilemma is VIX is 10.85. So it'd make more sense to do calendar classes. John says, can you do both at the same time? That's a consideration. And I'll try to figure this out over the next couple of days, but the bottom line is, you know, I just want the classes to be as practical as possible. If the class were starting today, it'd make more sense to do long Vegas stuff, right? But we don't know in 2.5 weeks, you know, SPX could back off 100 points and VIX could be at 15 and be perfect time for butterfly. So I'll let you know, but that's my plan, at least today, is to do the butterflies in 2.5 weeks in the calendars, but the VIX has caused me a what's the word, conundrum or whatever. It's caused me a problem. But we may switch the order, but we'll let you know. We'll figure that out. But today we'll talk a little bit on butterflies, but in a very low vol environment, right? And I think everybody could see the slide here. So we'll just go through a few butterflies and just talk butterflies a little bit. And if you have any questions, be happy to answer them. As John says, our double calendar rules are making me a little money right now. Yeah, I think they're doing, volatilities are very low. And when the VIX is under 11, I absolutely adore double calendars, that type of thing. All right, so here's kind of here's an SPX price chart that I looked at, made this slide maybe a half hour ago, but SPX around 28.59. Where's SPX right now? Maybe a little bit higher than this. SPX was 28.59 when I did this price chart. We should be pretty close to this. What's SPX now? Maybe a little bit higher, 28.61 or something. 28.60, 28.59. All right, we're right here. So as you can see here, let me just get this. So you can see here, folks, we've just kind of had this, over the last week or two. What would you call this? A slow grinding up market. It almost reminds me of not that slow, but overall slow, a couple busier days, but almost like when you're in grammar school and the teacher, not the teacher, usually the mischievous student, takes his fingernails and rubs them against the blackboard. That's what I feel like, this grinding move up. It's like we're that final 100 feet or 200 feet before we get to the top of Mount Everest. And it's just that grinding here. We're about, less than 20 points from the top of the summit, right? The highs in SPX that were hit in late January. So for most of this year, we've been struggling to get back up to the summit. Here was the summit at the end of January in the SPX, and then we had a couple corrections here, which people thought were unthinkable, near 10% down moves, first time in about 4 years or whatever, which I think spooked a lot of people because most people were convinced, and also designing strategies around the fact that there's no way we could go down over 5%. And so every decline over the last 3-4 years, people would just get long. Now, I don't think there's anybody here that did any of that, ha, 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 but those are the two corrections, and then we've kind of slowly mounted this comeback, from the 2550 level, and we've basically gone up 300 points in 4 months. That's quite a move up the mountain peak. You agree? That's quite a move in 4 months. Up the mountain peak, and here we are, and that justifies the VIX under whatever it is right now, 10.8 or 10.9, but that's very low, and that's normal as this kind of overall slow upward trending move, right? I mean, when you think about it, over the last 4 months, we've climbed up about 300 points. So it's taken 300 points in 4 months. But if you look at the first correction here, we went from basically 2870 to 2550. 300 points. And how long do you think this is? 2 weeks? So it's amazing how fast the market could go down, right? 200 or 300 points, and then what it takes to go up 300. It's interesting, isn't it? 4 months to go up 300 points, and the first correction here took about 2 weeks to go down about 300 points, didn't it? 2 weeks, maybe this period here. Interesting. All right. And you can see when it goes down what the effect, how much that VIX just blasts up to the moon, Alice, Jackie Gleason. And the second correction here, not as much as the first one, again, jacked up the VIX, and then as the markets started this slow ascent up Mount Everest here, the VIX started this descent down from the 50 level. Oh, this is the average true range, I'm sorry. VIX would be next. But if you look at VIX, this was the first correction, and how much VIX went up from the 10 to the 35 area. This is the second kind of correction where VIX went up to the 25 area. And then this 4-month rally here, you can see VIX has gone from basically 25 level all the way to the 10-ish area, 1070, Fran. Francis, Francis, would your name be Francois or Francis? Because Francis would be F-R-A-N-C-I-S, F-R-A-N-C-O-I-S, Francois. Sounds more debonair. All right. So let's talk a few different butterflies. Here's an example of a 30-day balanced iron butterfly, many different versions. When we do the butterfly class, it'll be 3 weeks. And we're basically going to highlight the most successful ones and where we're at with them and what durations we're doing, what adjustments, because, you know, these things evolve, right? You trade them differently. This would be more of a balanced iron butterfly. This would be an example of a 30-day iron butterfly, just to get us talking butterflies today. There's 3 different ways you can do a butterfly, all calls, all puts, or iron. How many of you, just to get an example, when you do butterfly, whatever type of butterfly, how many do A, usually do it in the puts only, B, in the calls only, or C, iron butterfly, which would be calls and puts? How many of you do A, in the puts, B, in the calls, or C, iron butterfly, which would be calls and puts, just to get an idea of what do you guys do? I think a variety. Some do puts, some do all of the above, some do, yeah, okay, quite a variety. Seems like, you know, does it really matter? No, no. I mean, they're the same. Does it really matter which you do? You know, my advice is just be consistent. Don't do the all-call butterfly and then you lose money and you blame it on the all-call butterfly. So you go to the iron butterfly and you do the iron butterfly and you do it for a couple of weeks and then you lose money and you blame the iron butterfly and then you go. It doesn't matter. They're all got the same graph, and you know, whatever you're comfortable with, again, stick with it, right? Stick with it. That's really the answer, consistency. So if you look at here, here's an example of an iron butterfly. And I would call this balanced. So if you look at, again, we're just basically talking about butterflies today in general. The class will be very specific butterfly strategies that we've been trading for a long time, so, and with very specific durations, and then really working through what we've seen in terms of adjustments and stuff, what works the best. But here's an example with SPX at 28.57.62, and I'm starting a butterfly at the money at the 28.60. Usually if we're between strikes, if the SPX is between strikes, obviously there's no 28.57 strike in SPX, I always go higher to the higher strike because that will get the position deltas a little closer to 0. But you can see if I set up an iron butterfly relatively at the money, selling 2160 call and selling a 2860 call and a 2860 put. So the foundation of an iron butterfly or any butterfly, you're selling the at the money straddle. And then for the wings here, I'm going, this is a 30-day butterfly. I'm going 30 points up on the call side. So I'm doing a call credit spread of the 2860, 2900, and on the put side, I'm buying my puts 40 points down, 2820, 2860 put credit spreads. So an iron butterfly is the foundation of a short at-the-money straddle. You're selling all that juicy time premium, and then we're buying less time premium against it as a hedge. That's all it is. And the way you make money on basically a butterfly is as the ideal location, if you stay near the short strike, you can see how much P&L you can make if we stay near the 2860 level. And that's because we're selling a lot more time premium at the money than we're buying on this out-of-the-money strangle here as a hedge. So as we stay close to 2860, how do you get this kind of teepee effect? This is the expiration graph for a butterfly. You get it by the shorts that you sold have so much more time premium than your hedges, which are more out of the money, the 2820 puts and 2900 calls. So that decay, the decaying, you're going to decay a lot more on your at the monies than you're going to lose on decay on the out of the monies. And that's it, right? And on this would be called a balanced iron butterfly, 40 wide. The width of the call credit spread and the width of the put credit spread is 40. And you can see the credit here is 2790, and your margin or risk is 1210. So for every one butterfly, it'd be 1210. And you get that by just take the width of the credit spreads are 40. So that's $4,000 risk for every one contract minus the credit. And so your risk is 1210. So for every, if I do one butterfly, it's going to cost me capital-wise or risk 1210. If I do 5, it'd be about $6,000. And this is where SPX was when I did it. This is where the VIX was. But here's kind of a dilemma. Our deltas are short 7. And not that you can never do a butterfly when the deltas are short 7. We like to be within a couple deltas, long or short, close to delta neutral. I mean, on a 30-day butterfly, because the VIX is so low, and you're short Vega, which means as the volatility goes down, you're going to lose money on this trade. Excuse me. As the market goes down and volatility goes up, you're going to lose money on this trade because, again, you sold the options with the most time premium, and then you're buying the options with less time premium. So volatility affects the time premium part of an option. So as the market goes down and volatility goes up, you're going to lose more on your shorts volatility-wise than you make on your longs. And so on the downside, you know, when you start doing volatility is much more important volatility risk on 30 to 60-day trades because you have this big short Vega and you don't really have that much. The other Greeks don't offset it. Theta is a lot lower on a 30-day trade, so it really can't offset your short Vega risk. So usually on 30 to 60-day trades on a butterfly, you'd lean a little bit delta short to offset the volatility risk on the downside because even though this is a theoretical number, Vega, it's basically saying if the volatility of each of my 4 options goes up a point, I could lose about $109. Now, does volatility work like that? Does it always go up a point? No, and it all depends on the move, right? If VIX goes, if we're in a 10, 11 volatility environment, if we go down 12. If we go down 6 points in the SPX, will that wake up volatility a lot? Not too much, some, but if we were to go down, 1% or almost 2 standard deviations, 25, 26 points, that'll wake up volatility and go up 1 or 2 points, which could affect this trade. Again, this is the expiration graph in 30 days, and then this would be the graph of how the picture looks today, and you can see how if this is the underline, look fine on the downside. If we go up, it tilts down, and that's because we're leaning 7 delta short. So do I want to lean delta short on a 30-day butterfly when the VIX is really low? Yeah, but 7 deltas might be a little bit too much, maybe 4. So one of the ways you can reduce your short deltas on a balanced butterfly is turn it into a broken wing butterfly, and that's why we do it a lot of times, is to get the deltas more under control. So if you look at the next example, I took the same broken wing butterfly, right, where we're selling the 60 strike. Our long put is the same, but all I did is I came in, our long call before was the 2,900. So what I did is, instead of buying the 2,900s, I came in 10 points and bought the 2890. So now my width on the upside is 30, and my width on the downside is 40. I said, Dan, why did you do that? To get the position deltas from short 7, it's a little more under control, minus 1.75. And now that I have a broken wing, because I narrowed my call side of the iron butterfly, I have much less risk on the upside compared to the downside. So it'd be close to a neutral delta butterfly, but it's more neutral to bullish because I have a lot less risk on the upside than the downside. In this case, the margin goes up a little bit when you turn a butterfly from a balance to a broken wing. And so here's the credit, and here's the margin or risk. So the way I take the margin or risk on a broken wing is just take the risk of the worst side, which is the downside, minus the credit, and then you get the margin. And now the deltas are a little more under control, closer to 0. My theta went down a little bit actually, and I'm short Vega. So these are different type butterflies. And, when the VIX is 10, butterflies are a bit of a, do I normally, when the VIX gets in the 10s, am I doing butterflies generally? No, I'm doing more butterfly alternatives. What would be a butterfly alternative? If you look at a graph like this, right, if you look at a graph like this, well, a calendar is very similar to this. So a butterfly is saying, I'm selling my at-the-money call and at-the-money put and buying my wings further out of the money in the same expiration. A calendar is saying, I'm selling at-the-money options and buying my wings a further out duration, similar strikes in a single or double calendar. So calendars would be alternatives to butterfly type trades in a low volatility environment. Their foundation is very similar, selling at the money options where you have all the time decay. Now, going from trades, short-term trades 30 days out that have paltry theta, right? Now you go to a little more high octane. Here's a 9-day balanced call butterfly on the Aug 17 expiration, the weekly options. Aug 17s, if you look right now, have 2 expirations. Aug 17, you have a monthly and a weekly, like I think a 9-day and an 8-day. You'll see 2. It gets a little confusing. But this would be an example of more of a balanced 9-day, and it works. So this is today when SPX is 28.58. Set my short strike right in the middle. There's the expiration graph at 28.60. By 1:28.30, this is all calls, and by 1:28.90. So I sell that juicy at-the-money option, 28.60, and buy a long at 28.90 and 28.30. And so by doing a balanced butterfly right now in a very low VIX environment, my deltas were actually long, which is a little unusual. I really haven't seen that. But you have very frothy theta, which is a delta theta ratio almost 43 to 1. That's again, that's very good. But you're going to get that with a short-term trade. It doesn't mean a 30-day trade is bad because the delta theta ratio is 3 to 1. It just means it's a different type trade. And so you can see in a short-term trade, theta is big enough to fight the vega, right? It's a big enough number. Whereas in a 30, 60-day trade, theta is not really big enough to fight the vega, so you have to kind of lean the deltas into the trade a little bit more. Here's another type of a butterfly. This is 51 days out. Instead of going at the money, here's another type of a butterfly, which would be an out-of-the-money put broken wing butterfly, 51 days out. So SEP28 expiration. So if this is the underline, when I looked at it today, I'm setting the short strike about 18 points out of the money here on the downside, 28.40. My upside, I'm buying the 28.80 put, 40 points up from the short strike. That's my risk on the upside. And on the downside, I'm buying the 27.90 puts, 50 points down from the short strike. 27.90 and 28.80. And you say, hey, Dan, why is there a lot less risk on the upside than the downside? Well, if you look at the width of the spread on the upside is 40, and the risk of the spread on the downside is 50. So we have more risk on the downside. And again, this is the smooth, this is the T+0 line, how the graph looks today if I put it on, and this is the expiration graph. And you can see the position deltas pretty close to 0 starting out. Theta, a paltry 3 on a 51-day trade. But again, that's normal, 3 to 5 theta or something like that on a longer-term trade. And the vega is short 53. You know, would I do this trade today? No. Why? Because of this, VIX. I'd want a higher volatility to do this on a day like this. So these are different type butterflies. And then another butterfly, I don't know, has anybody ever done a bullish butterfly or a bearish butterfly? Has anybody ever done a little bit of a directional butterfly? Carolyn says above 12 VIX. Yeah, usually, yes. So here's some directional, and I've done a lot of these in the last 5 weeks with when the internet, when the FANG stocks, your Google, your Amazons, Apple, and those Netflix have gotten beaten up, and then kind of playing the ranges, they've had some pretty good movement. I've been doing like 1 week bullish or mostly bullish butterflies when they've dipped and writing them up have been very profitable. Lately, again, this is a speculative trade, but this would just be an example of one. Today, if I were to put one on, when I put this on, when I looked at this today, Google's already up $10, but this would be an example of one. Today, August 8th, with Google at 1266, excuse me, made a mistake there. I set the short strike at 1285, about 20 points higher, so this would be where the underlying price was when I looked at this 1266, and then placing my short strike about 20 points higher. I do a 10-wide butterfly by 112.75, fell 2 12.85s by 112.95, using the Aug 17 expiration. That's a week from Friday, so it'd be about a 9-day trade, and I pay $1. So you can take a little bit of a bullish stance and a $1,266 stock for $100 for one contract, and that's the risk. So these would be types of butterflies. You know, probably in the butterfly class over 3 weeks, we'll touch on some of the more successful butterfly methodologies that we're currently doing them, and what's the latest tweaks, and at least how we're looking at them. We're always learning, and as a community, we're tweaking these things, right? With a lot of excellent craftsmen in the community, we're just, you know, we're tweaking and trying to make a better chair, right? And so, but as I said, I'll let you know whether I'm going to do the calendar first or the butterfly. It's tough to make a decision because you don't know in 2.5 weeks when we start the butterfly class. If VIX is these levels, I'd probably do the calendar. If VIX were 13, 14, I'd do the butterfly class. But again, does it really matter? No, but I want the class to be practical because we always are doing live trades, and so we want to make it as practical as possible. Usually on these directional butterflies, I'm looking for 35 to 50% within the week for these speculative 1 week butterflies. It's usually the proper target. So anyways, folks, I just wanted to say, hey, tell you what we were up to with Mark's class coming up. These next 2 classes kind of coming up. We'll keep you posted. Again, I'm planning on doing the butterfly class, but if the vols are really low, it would be more practical and realistic if we did the calendar, but I'll keep you guys posted. And if you have any questions on anything, the upcoming classes or anything I can help you with, you can send me an email, dan@sheridanmentoring.com. But otherwise, have a wonderful day, folks, and we'll see you next time. Thanks so much.